Thank you for all coming along today. This is the fifth and second last in a series of GST events that we've been holding this year after last year's events, which were very successful. So on behalf of CCH, welcome and thank you for attending today. I'd just like to hand over to someone we're very lucky enough to have here to chair the event today, and that's Luana Sturck from Westpac, where Luana is the head of tax operations there. Has been with the organisation for, I think she said 8 years, which is what I'd like to say. And she'll be chairing the event, facilitating responses from our panel and introducing them all to you now. So thank you and please welcome Luana.
Okay, I'm not sure. Oh, okay, that's working. Great. Good afternoon, everyone. Welcome to the CCH Tax Managers Network. And our session today is pretty popular, which is the ATO Compliance Program for 2014-2015. So look, I'll just do some quick introductions and I'll just run through the proceedings for today. So what's going to happen is we're going to get a presentation from the ATO, then we're going to open it up for panel discussion. And we've also got, this is also being webcast today, so we'll also have some questions coming through from the webcast, and I'll be reading those out if I can manage to work the technology on that. So without further ado, I'll just go along the row here. First of all, we've got Stefan Kovic. Stefan is the ATO Senior Commissioner. I'm going to try and get this title right. I have to read it, sorry. Senior Assistant Commissioner, Compliance and Assurance System, Indirect Tax. Is that right? Got that right?
No, it's just fine.
It's just fine? Now, Stefan's been with the ATO for about 30 years, and actually he was sharing with me before, he used to sit at a desk next to my boss, the GM of Tax, Michael Barber, at the ATO, so it's a very small world indeed. Stefan considers himself to be a jack of all trades and master of none, but I'm sure that's not true. His primary tax technical experience is in the machinery provisions of the law, and now he's working in sort of the audit and assurance area to do with indirect tax. So welcome, Stefan. We've then got Deborah. She heads up the tax practice, the indirect tax practice at KPMG. Deborah's worked both in Australia and New Zealand in GST for many years, and I was also formerly worked at the Inland Tax Revenue Authority over in New Zealand as well. So, and then we have Dennis. Hi, Dennis. Dennis works for PwC. He's a principal there. Dennis was actually involved in the initial policy crafting of the GST legislation, I'm led to believe, yep, and also similarly has a very long tenure of service in both indirect and GST. Then we've got Roger beside Dennis. Roger is he's a partner at Ernst Young, so we've got all the big four here today. Oh, Deloitte, sorry, oh my goodness. That was a bit of a faux pas. That was a very Freudian slip, sorry. Roger, he was a partner, now he's a partner at Deloitte. He's got over 25 years experience in both Australia and New Zealand as well, and has been providing many years of valuable service both here in New Zealand and Australia as well. And on the end we have Mark, and Mark does send his apologies, a little bit sick at the moment, so he may be a little bit quieter than normal. Now I will get this one right. Now Mark is a partner at Ernst Young, and he's the Oceania leader for the indirect tax practice there. And he's got many years, extensive experience in GST and indirect tax experience. So when I actually counted up all the years, there was over a century's worth of GST experience on the panel. Not that you'd be able to tell by looking at the youthful faces before us. So look, I'm going to hand over to Stefan to kick off proceedings. So thank you very much.
Okay, thanks very much. Yeah, I won't worry about my title. I'm actually acting in a different role at present. I'm responsible for looking after the basically the advisings area, the review and litigation area in the tax office, in the indirect tax. Oh no, that's okay. It wasn't your fault. No, we get moved around so often. This is about my fourth or fifth role in 3 years. My actual position, I actually do work in the compliance and assurance area, and we're responsible for also the integrity of the business systems risk. As you've probably heard, the tax office is going through a period at present where we're downsizing, where we're losing about 3,000 staff. My area is flagged as one of those areas that's probably going to be corporatised, so I don't know what I'll be doing after the 1st of July. But anyway, today I'm here to talk to you about our compliance program for 2014 and 15. And in particular, the improving of the integrity of your business systems using different types of software. I'll go through and talk about, I want to give you a bit of a picture about GST and the big and the macro picture at how it fits into our administration. I'll talk a little bit about the risk differentiation framework and how we've been looking at things in the past. Some of the areas of our compliance program where we still perceive there to be risks and we'll have ongoing activity. Then I'll talk about our compliance priorities for next year and where we want to shift things, and then more about the assurance systems and software and the way we want to be doing our work differently in the future. Now, a lot of what we're going to be doing next year really comes from what the Commissioner's wanting to do in the tax offices, which is to reinvent the office and for us to do different things differently. He's got two areas of main focus. He wants to change the client experience, and Neil Olsen, our second Commissioner, he's now referring to himself not so much as second Commissioner compliance, but second Commissioner client experience. And another second Commissioner we have there, Jeff Lieber, he's looking after service delivery. So we've got a vision for the future. It's called our 2020 vision, and that's the year, because that's the year when the Commissioner's term comes to an end, I think. But it also sounds nice, 2020. But anyway, what he wants to do is he wants to change the way we interact with the community, the type of products we use, how we go about doing our business, and actually improving the client experience. I put this this diagram up there, but it's really to remind you that what we have is a value-added tax, and it's all about the value add through the importing or manufacturing process up to the point of sale, where it's finally there's a consumption of a good or service. And in business-to-business transactions, there's actually no outlay of cash by businesses. The amounts that they pay in GST, they claim back. The amounts of GST that they charge, it's the customers that pay that. And the way the system's designed is actually for either customs on importations or ourselves to be collecting the value-added amount on the way through. It goes to the Department of Finance. They make a distribution according to what's decided by the government in their agreements with the state and territories, and then it goes back into services provided by the states and territories to be for the benefit of consumers. It's a really good tax in that it provides untied funds for the states and territories to spend on things like housing, education, hospitals, police, all those services that make a real difference to people's lives. So I just wanted to, got to keep in mind that that's the bigger picture of how the tax is designed to work. This diagram here, it shows you the way we're starting to look at our revenue collections. The indirect tax area of the tax office was the first area to start doing some analysis around tax gap, and they're the latest statistics we've got from our analysis. We're currently doing the 2012-13 figures and also at the same time working on this current year's figures. But as you can see, roughly 90% of the revenue that's available in the economy flows into the tax office through just voluntary compliance. That's the level of correct reporting that occurs. About 5% of it is actually what we get from our compliance program, and another 5% is what they call the tax gap. So that's the theoretical amount that's out there that we're not collecting either through voluntary compliance or through our compliance program. So when we actually look at our performance, these figures are going to become more and more important. So rather than measure the amount of revenues that flows in on a daily basis, if you actually look at our investment in our compliance program, those figures are really important. It's the bigger picture. Is the tax gap going up? Is the amount of voluntary compliance income going up, or is it going down? And that's where we make decisions about how we want to invest in a compliance program into future years. If you actually look at the historical side of it, you can see that after GST first came in, The tax gap was almost twice of what it is now, but it's slowly been coming down, and it's remained steady at around that 5.4%, 5.4, 5.5% for the last few years. If you do a comparison with European Union members, you can see that our level of voluntary compliance and the tax gap itself is very good. We're right down the lower end. If you look at those countries where it's peaking on the right of that graph, you tend to find that those countries' systems aren't as good as ours. And not only that, but they have higher rates of indirect tax. And the higher the rate of indirect tax, the greater the propensity for people to try getting out of paying it. But overall, Australia's doing very well on a comparative basis. For the tax gap. Driven? No, we actually get all the statistics coming in from the ABS, and we look at what's happening in the economy, and then we take off from there all the exclusions in the GST Act, in the GST law. So we try to work out how much tax should be coming in based on the ABS data.
So it's a black box, effectively, that we couldn't replicate with the information that's externally available.
Yeah, yes, it is. Yeah, and the team who do this, they are econometricians, and they've actually taken this work to the next step, and they do things like voluntary compliance ratios. They look at what's the impact if we go out there and from our audit program, if we're auditing a particular sector of the industry, we can actually see whether or not you can see the improvement in their compliance level after the audit program, and then whether it actually continues to improve or starts going up again, and it helps us to decide also what our compliance program should be into the future. This is a picture about the sort of market that the people in the audience here are involved in. Our focus is really around the large market and the level 2 market for the purposes of our discussions today. The large market we regard as taxpayers with a turnover greater than 250 million, and then the next level down is what we call our medium level 4 taxpayers, and that's where there's a turnover between 100 million and 250 million. As you can see, the large market is really significant to us because we get $21.5 billion in revenue each year from that market, 46% of the GST collections, and it's only from 1,266 taxpayers. So we have to focus a lot of resources, or an appropriate amount of resources, on that market, because any problems that occur in that market can lead to significant consequences for the revenue flows. At the level 4, you can see with 14,500 level 4 taxpayers, we only get 4.5 billion in GST. So, you can see, if you follow a map for the whole of the market, you can see how it drops right off. That's the risk differentiation framework that we've followed. And this has been the way we've sort of looked at taxpayers and where we think their level of compliance or the impact of their behaviours may pose a potential risk. And a lot of our compliance program over the past few years has been built around this model. You can see we've got 2 quadrant 4s. There's a mistake there in the slide. The medium risk taxpayers should be the quadrant 3. But essentially, quadrant 1, which are our high risk taxpayers, that's taxpayers where the consequence of them making a mistake will have a big impact on the revenue, and also where we've got information about issues they have. The likelihood of there being a problem with those taxpayers is high. So that's the area where we probably put most of our review and audit type resources. There's very few taxpayers in their group, in that group up there. As you can see, it's less than 5% of the market. The key taxpayers in quadrant 2, there's about I think 125 or something of key taxpayers. Those taxpayers are very important to us. They generally are a very compliant group of taxpayers, but there's a lot of revenue that they contribute to the GST system. So we offer a more tailored service for those type of taxpayers. Medium risk taxpayers, lower consequence, but they're taxpayers who still have an issue, and we undertake reviews and also some workshops on those taxpayers. The lower risk taxpayers, you know, we've had a look at them, but generally, because they're lower risk and the work we've done there, we just don't feel that there's a risk in that group of taxpayers. But over the last 3 years in playing that market, we actually find, as far as the integrity of business systems goes, that there's generally a good level of compliance. Most of the revenue of that $320 million we get in, or $350 million we get in, comes in the form of voluntary disclosures, and we like to see that happening, and that's a reflection of the willing participation in the tax system. So with that risk differentiation framework, as I said, what we have here is a differentiated sort of treatment that we apply in looking at taxpayers. So we have a service approach, which is particularly around those key taxpayers. We've got an assurance program that we apply across most of those different quadrants, and particularly with the high risk taxpayers, that's where we undertake some sort of enforcement activity. But of the adjustments we get in, I said before, with the integrity of business systems, we always get a lot of disclosures, voluntary disclosures there. The other risk to us are issues of factual matters where there's a difference of opinion between our view of the law, the application of the law to the facts, and there's always going to be some adjustments there. But what we want to do is shift our approach into the future. As an organisation, the ATO is conscious of moving away from being a risk-averse organisation that's really risk-averse at present to more of a risk management approach. And as I said before, the Commissioner wants us to change our culture so we become more focused on the client experience. So that's the client experience when you're dealing with in relation to advice products as well as in relation to our compliance activities. In the past, we've had a lot of compliance intervention, but we're going to have a greater focus around assurance and trying to support taxpayers to get it right. We need to better understand business and accept what is fair and reasonable in the participation of the tax system. I don't know whether any of you participated in the Corporate Tax Association convention up here earlier on this month, but the Commissioner, whenever he puts out a speech, a lot of us tax officers just grab it because it gives a real good indication of what he wants us to do. And there was a few really important things that he said in his speech, and it sort of goes to the heart of where he wants us to shift our thinking. What he actually said is a fair system, to have a fair tax system, it's got to have integrity. And he said we've got to collect the right amount of tax. So he wasn't saying we've got to collect all the tax that's due under the taxation law, it's just what's the right amount of tax or the right amount of revenues. And the tax office has got to work to support the productivity and the competitiveness of the nation. And they're themes that you see more in the past in Treasury's mission statements, but he's saying no, as part of government, as a government agency, we've got to do things to support productivity and competitiveness, both in our audit work and also in our advising's work. And he also made reference to the government's mantra of Australia being open for business. So that's essentially saying that as tax officers, we've also got a role to play there. You would have all seen the Prime Minister at the New York Stock Exchange where he rang the bells and there was a big banner up behind him and it said, Australia, we're open for business. And so we've got to be mindful of that in our work. And so if you look at what we're doing in our revenue and that we expect to bring in, the focus is going to be more around just managing that tax gap. And the Commissioner actually referred to it in his speech because 95% of the revenue just comes in the door, and in the past a lot of our focus has been around that 5%, whereas we don't seem to be providing an adequate service and the support to people who are willingly participating in the tax system. And he's actually changed our mission, and again it's really important to know what that is as a tax officer, because he says we're there to contribute to the economic and social well-being of Australians by fostering willing participation in the tax and super systems. And just in the office you get a lot of people sort of focusing on those words, willing participation in the tax system. But a lot of them, we've got to get people to understand that it's also about the economic and social well-being. So make decisions that are good for the economic well-being of the country. The tax office in the past, we used to, in one of our mission statements, said we've got a role of protecting the revenue, but I've never seen that in the law. And that's part of the cultural issues that you're having to deal with. Tax officers thinking that it's their role to protect that revenue, make sure that we get that revenue, whereas the Commission is now saying it's about the right amount of revenue. So there's just some themes that are going to influence the compliance program in future years. I mentioned before about Second Commissioner Jeff Leeper and work he's doing around service delivery. And we want to move to a situation where there's going to be a greater focus on capturing data from natural business systems. And we want to support different innovative products to change the way we do our work, both our compliance work and also our operational work. Now, there's four key pillars that we focus on. One is registration, the other one's lodgement, the other one's correct reporting, and then the fourth one is actually collection of the debt. And our responsibility in our area is about the correct reporting, making sure that people get the information in their business activity statements correct. Sorry, I was just about to knock my glasses off the lectern. That'd make it. I've done three. This is my third presentation. The first one I knocked my glasses off the lectern and thought I'll pick it up. Towards the end I stepped back and they smashed. So I reminded everyone to let me know if I drop them again. And yesterday I was part way through and the moderator was saying, Stefan, you've dropped your glasses. So I'll put those down. The other thing we want to move to is a digital by default. We've had provisions in the law and the approved form provisions that have given the Commission the ability to mandate people to lodge electronically. That's been in since 1990. Since 2000. We haven't done it, and we still have a very low number of people who interact with us electronically. Also with GST, only the other day I found that there were 3,000 of those large taxpayers, the large and the level 4 taxpayers, that were still lodging quarterly when they should have been lodging monthly. And that's partly a problem of our own systems. We acknowledge that systems are difficult beasts, and in our change program, they just weren't able to, as they were introducing our new lodgement monitoring system, to put the right controls in to make sure that people who are required to lodge monthly were lodging monthly. So any of you who were in that category may have already received a letter from the tax office saying you've got to change your lodgement cycles. But we want to move to a situation where not just large businesses, but most taxpayers are dealing with us electronically. So it's going to be a digital by default system moving into the future. These are our compliance priorities. They have been like this for the last few years, or probably since the introduction of GST, because it's the same areas that always seem to cause us problems. Property and construction has always been an issue for us. It's not such a big problem in the large end of the market. It's more in the smaller players, particularly around disengaged property developers, phoenixing, not just for us, but also for our income tax colleagues. And what you will find is that we'll be working much more closely with our income tax colleagues when we undertake compliance activities. International cross-border, not so much a big problem for us, but we are now becoming more engaged with other tax agencies in other jurisdictions to work on policy matters around the administration of the law. We do have what we call an international tax engagement strategy, and we're working on a number of OECD working parties. One of my colleagues is just about to go over to Paris. We're going to have a permanent person based working on the OECD and participating in the various forums. And one thing that's going to be happening in the near future is looking at the offshore supply of services, and the proposal there is that people are going to have to be registered to supply offshore services, so they'll become taxable. Financial supplies is also an area that's considered a risk for us. It's really mergers and acquisitions always causes issues, particularly around the integrity of business systems where you're bringing different entities together that are using different systems, and you can have manual processes in place that causes problems. Not just us problems, but cause yourselves problems. Apportionment of expenses, that's always a question of fact, and it's also a high-risk area for us. Fuel tax credits, we'll have a focus on that, particularly with the indexation of fuel, but that tends to be more at the lower end of the market. And then probably one of our biggest risks is the integrity of business systems, which I'll talk more about shortly. The one that I don't have listed up there, and it does involve systems, is refund integrity. That's probably an area where we face the biggest risk, because as soon as you're involved in any systems, you've got criminals trying to crack into your systems to get money. You know, you've just got to look at the fraudulent transactions that are taking place in relation to credit cards. Well, we're no different, and we do have people from all around the world trying to lodge fraudulent business activity statements. So we have quite complex systems and risk filters in place, and now we've got actually some really smart analytical models operating to try and stop those refunds going out the door. So assurance and the relationship shift. Changing the relationship between what's the tax office and the tax community is something that's the Commissioner wants us to do. If you actually look at the relationship over the last 20 or 25 years, for those of you who remember the days before we had self-assessment, as long as the taxpayer made a full and true disclosure, the Commissioner couldn't amend an assessment. Self-assessment was not just about getting rid of all those people that looked at your returns. It was also about shifting the relationship. And so when we moved to self-assessment, and the legislation came in 1992, what we did there was we said, taxpayers, you've got to get things true. You've got to give us information that's true and correct. And so supporting the self-assessment legislation wasn't just those provisions that allowed us to accept returns at face value and for an assessment to be deemed to have been made. It was also about bringing in the new penalties regime, which is about the behaviour of a taxpayer in trying to get it right. And it was also about the rulings regime, which was there to give people certainty. So you could come to the Commissioner and get certainty about the application of the law. You could get either private ruling, or you could ask the tax office if it was a significant matter to put out a public ruling. Where we want to get to is change the relationship again, and we don't necessarily require legislation to support it, but it's about people making a fair and reasonable attempt to participate in the tax system. And if you look at our compliance program, assurance program over the last 3 years or so, it's about us going out there and undertaking governance workshops with large businesses to see that they've got appropriate processes in place to ensure the integrity of their systems, so the business activity statements they're lodging are correct. Where we want to shift to is, rather than us go out there and seek assurance, we actually want taxpayers to give us an assurance that they've got the systems in place to ensure that their business activity statements are correct. So that's the fundamental shift that we're making, and we're still developing how we're going to get there. If you actually look at our program, we do have public companies, and the Commissioner made a conscious decision in our income tax space to change the structure of the office. So there was a focus on public groups and a separate area of focusing on private groups. And he's done this because there are different governance arrangements in place for public companies. And he's saying, why don't we rely on that to get assurances about their participation in the tax system? So what we're looking at doing is saying, if you're a public company, most public companies have audit committees. They've got their boards they report to. They're reporting to the stock exchange. They're reporting to the Australian Securities Commission. They've got their shareholders looking over them, and in a lot of cases also got Sarbanes-Oxley applying to a lot of what they do. So why does the tax office have to come in and check again? So What we want to introduce is a system whereby we can rely on taxpayers looking at some basic standards that we give them and giving us an assurance that what they do is appropriate. And so the self-assurance model is all about us providing a set of rules or standards that we think are necessary from our perspective to give us an adequate assurance that a taxpayer is complying with its obligations and getting the CFO or CEO to sign off on that. Now, a lot of large public or the public companies already have quite sophisticated systems in place, and there are also assurance tools out that a number of companies use. And what we want to do is let the companies use those tools to give us an assurance. What we'll be doing is going through and looking at what we generally have in our governance workshops. What are the requirements that we have, and we're going to put them out there, not just to the companies, but also work with the software developers to see whether or not we can put our business risk tests into their software to give us that assurance. Yeah.
Software developers, the ERP providers themselves.
Yeah. We've already had discussions with. We've got a software liaison forum. We've already had discussions with them about how we can provide the current business tests that we have in our risk models and have them built into those systems. With the large taxpayers that are private groups, they don't have the same level of governance as public companies. So the requirements in relation to those taxpayers would be slightly different, but we still want to offer them the ability to give us a self-assurance that what they're doing is appropriate. Government entities are a group of people that we'd treat differently. With government entities, we're actually right now we're developing a number of rules based around our governance requirements, and we would allow government entities through their departmental head to sign off that they are complying with their obligations. And at the smaller end, we'll be working with companies like Reckon and MYOB to actually build some of these rules into their system. In the longer term, what we'd like to see them doing is having some smart rules and tests built in their system that will actually do a lot of the validation that we currently do when we do our audit work. If there are natural systems there that can do that, and systems are actually evolving quicker than we probably realise, all the Commissioner wants us to do is say that if a taxpayer is using those systems, it should be reflected as being willing participation in the tax system, and then we'd have a no or a light touch with them. So this is all about having systems in place that the Commissioner says reflects an adequate participation in the system, therefore there would be no need to include them in an audit program. But we would always reserve the right to question a taxpayer about the application of law to facts. So this self-assurance purely relates to the integrity of their business systems and the investment in systems in the preparation of the business activity statement. Yeah.
The words you're using, and forgive me for the forum we're in, sound a little bit like we could get to a point where we've got product endorsement from the ATO. Yeah. So this is a piece of software that has the right profile of output. If you use that, you're of lower risk, which looks awfully like product endorsement.
The ATO doesn't endorse products. With our existing arrangements with software developers, what we do is we put the requirements out there, and we just say we ask for them to assure us that they satisfy those requirements. We're not in the business, and we probably don't have the capability to go out and do that product assurance ourselves. There is an issue there about how we interact with the market as well. Do we want to be a retailer of software products or a wholesaler of software products? And our preference is actually just to put requirements out there and let the market develop them. As long as they meet the requirements, we should accept them. It's the same as us acceptance by the CEO or the CFO that they're using the products appropriately. We should be accepting accepting an assurance by the software developers that their products do meet the standards. As you can see up there, we're at the stage now where we're developing what we think the appropriate rules are for the software products, and we're going to be working with the software developers and tax practitioners to ensure that what we require is not overburdensome, and that it can and that will give us a reasonable level of assurance. So, what we'll be looking for is software that and an undertaking that the CFOs can give us about how they use their software, how it's automated, and what they do and what they do in relation to different types of systems, particularly where there's different systems within their groups, and also how they deal with things like classifications.
Assurance?
We haven't decided that yet. Well, currently we go to the CEO in our ACA arrangements, and it's almost, I don't want to use the term ACA light, but it's a bit like going into the same sort of arrangement where we'll decide that it also could be that there could be a sign-off by the practitioner that it's been applied appropriately. We haven't worked out those rules yet.
It sounds a bit like ACA light with a kind of unilateral opt-in. Yeah. You can just do it if you wanted to.
Yeah, you can do it. If you're prepared to invest in this, you'll get a certain treatment from us. If you're not, you're still on our radar for compliance work.
Just on those sort of tests, is the tax office looking at almost having a list of type data integrity type checks that these systems will be doing? I mean, most of the stuff we do with our clients are generally quite specific to those clients, but you could probably say there's a fairly, 75% of them are fairly standard.
Yeah. Well, that's the balance we've got to draw. It's difficult to be really prescriptive about what you want because different businesses use different systems. So we've got to come up more with standards that we expect to be met, and there'll be different tailored systems used by different businesses. But we want to allow all companies to be able to use this.
Yeah, I think you're right about the systems, and many of them are different, but it's more probably the data integrity checks that you're doing to effectively verify the numbers is where there's generally a core group that we do, but then all of a sudden we start to tweak them for individual clients. Yeah. And I'm just wondering whether the tax office is actually looking at actually setting out the types of data integrity tests that they would expect, and a whole bunch of others that might be nice to have.
Yeah, and those tests are not dissimilar from what we do in our existing business rule tests at present. So we would be specifying those, but then also going to the next level and also specifying some governance requirements. Do you have effective controls behind your system? Have you done performance testing on your systems? Things like this. Yeah, so as I say up there, anyone who's going to be using self-assurance software or processes, and this was actually written a few weeks ago, and we've actually, I guess, progressed our thinking since then. But it's not necessary to use assurance software. A business may already have software that's tailored for its own system, and they think that as long as they meet those basic standards and also give us the assurance, they'll be put into a low-risk classification. And as I mentioned before, we wouldn't be looking at them except if there's an issue about the application of law to a question of fact. One area where we are going, and that's in a later slide, is our use of analytics. We're becoming more sophisticated in our use of analytics. It's a bit like the banks looking at patterns of behaviour and trying to predict events. And so we've got a lot of really smart, but not enough, mathematicians and statisticians that sit there and do the analytical work, trying to develop models to predict which taxpayers' behaviours are out of pattern And what eventually where we want to get to is be able to identify which taxpayers' behaviour is out of pattern and they become an outlier. And it gives us the ability then to contact them and just say, listen, there's something out of whack here. It's a more sophisticated version of saying, oh, geez, that credit you claimed is out of pattern with your normal behaviour, and us contacting them to find out what that credit's about. We should be able to detect outliers in relation to detailed matters around a taxpayer's particular behaviour. And that would become the basis of identifying someone for a query or perhaps some sort of enforcement activity.
Let's take it back a step. You mentioned before about the right amount of revenue.
Yeah.
And put that together with this concept of something that's a bit like an opt-in ACA light. To me, one of the big advantages of an ACA was the annual clearance letter, which people didn't talk about very much, but it was at least a piece of paper that said, right, that year, that's done and dusted. We, the tax office, are not coming back to play. So is that a component of this as well?
Yeah.
That if I've met this set of basic standards and rules, and you've got your assurance from whoever it is who's required to give the assurance, that once that's all done, audit year closes, as in stat audit year closes, and it's all over. We're not still living as all the GST people in the room constantly live with this sort of rolling 4 years of, if there is a system flaw, the thing just continues to escalate. Yeah. Is that what you're saying?
Yes. We would expect the CFO or the CEO to give us written notification that they've complied with the assurance requirements, and in response to that, they will be. We haven't worked out the machinery of it yet, but we would be giving them a letter saying, yes, you will not be part of our compliance program for the next 2 or 3 years. That's the sort of thing we're looking at.
And in the at the end of the 2 or 3 years, is the audit, is the year that has just had the assurance given on it, is that in scope of review, or is it just dead?
We may come back and we haven't thought through the details. We may come back and ask a few further questions, but as long as we've got another assurance from the CFO or the CEO that their systems will work in accordance with our requirements, it will just continue on.
That would seem to me consistent with a right amount of revenue kind of approach. It's, well, you've made this fair and reasonable effort. We've all agreed what it is that effort consists of. You've assured us that you've done it. It may not be that it was perfect, but even if we find that out years after the event... and
that reflects the willing participation in the tax system. One really good indicator for us going into the future is whether or not those voluntary disclosure levels are going down. So, we'll be tracking that tax gap. And the tax gap I gave you there was a tax gap for the whole of Australia. We can actually break the tax gap down into markets, which we have done. And so we can actually look to see exactly what's happening. If we see that tax gap is widening, and the voluntary disclosure levels are going down, well, then we may decide to review what's going on and make some inquiries as to why we aren't seeing those same voluntary disclosures and why the revenue's falling.
So
it's really difficult to say anything more definitive in that stage because the world's moving so quickly, and we're talking about what we'll be doing in 3 years' time. We're just in the process of what we're going to try to work out to do in the next 6 months.
So just going back to those 4 quadrants. So effectively what you're saying is that you could be in quadrant 2, which is a key taxpayer, but if you put in one of these sort of software products, it does a whole series of checks that effectively give the tax office comfort that there's a whole bunch of things that are being done to test the numbers that are coming off the system. Gets signed off by the CFO. You're sort of talking about shifting them from, say, quadrant 2 down to quadrant 4, which is the low-risk taxpayers, is that what we're saying? And then presumably you're into a whole different regime then of how you interact with the tax office in a compliance sense at least, right? Yeah,
looking at it in the context of the quadrant, that's true, but you've got to start asking, is that quadrant still relevant going into the future? If we're looking at just the large market with 1,288 people in there, and a lot of people enter into this, does the quadrant become relevant? You know, we've become more sophisticated in trying to identify specific issues of risk, and so.
But I think that in one sense, in a crude sense, right, the quadrants sort of govern how the tax office is going to interact with that group of taxpayers. Yeah. So if you're in quadrant 1, for example, then I'd expect that you're on first name basis with a whole bunch of tax auditors, right? Yeah. As opposed to in quadrant 4, where you may only speak to them every 3 years
or so.
Well, possibly. Or there's a blip on your tax return and and on your BAS, and then somebody might call you.
Yeah, that's right.
Yeah. So.
And when we go through and look at the risk differentiation, we do sit down with our income tax colleagues, and that's why some of you will get a different rating for GST as income tax. So, so they're just a few requirements there that we were looking at the software and some of it. I won't go over that because we've sort of touched a lot of that. This is really the area of focus about the future, and that's probably more relevant. So, one thing that we're looking at is giving our business rules, as I said before, and audit tests to the software developers, and that gives us a level of assurance that the systems are more sophisticated than what they are now. We also want to develop our own e-audit capability, both at the lower end of the market with small businesses as well as the upper end of the market. You know, the tools that are out there now, some of these assurance software programs are pretty sophisticated. And if a taxpayer is not going to invest in assurance products themselves, we may want to actually ask for them to give us their data files, and we'll run those same tools over them, and then we can go back to them and say, well, what are you doing about this? So it's a really good tool for us to use for our own audit purposes, and we are licensed to use some of them at present, and we're currently doing a little bit of testing around that. We also want to identify opportunities for the use of EYCAP. EYCAP is the External Compliance Assurance Program. It was developed by our colleagues in public groups and internationals area, and the Commissioner announced in his speech that we're about to start piloting that. And essentially what it is allowing a company to decide that they want to use their external auditors to undertake a review of factual matters and provide that information to the tax office. And so GST is going to be piloting that in the next few weeks. We're actually also thinking that whether or not we could use not just the external auditors, but anyone who's appropriately qualified to undertake those reviews. I mentioned before about the development of the analytical models to predict business behaviours. We'll be going down that path. And we're going to continue using the compliance effectiveness and tax gap analysis to support the investment in compliance activities. As I said, that is really going to be the real measure of whether or not we're collecting the right amount of revenue. Although we started that work in indirect tax, income tax are now starting to do that same sort of analysis and looking at what's the level of the tax gap in the income tax market. So that you'll actually find that over the next few years, the income tax and the GST will be working more and more closely together on issues. But if we actually turn around and sign off on the integrity of business systems for GST purposes, it's logical that same undertaking should apply to other taxes such as income tax, your PAYG withholding responsibilities, and your excise responsibilities as well. So I think that's the end of my formal presentation, and I guess we'll hand over for questions.
Yep. Okay, thank you very much. Okay, what we might do is I might just turn to the panel very briefly to see if they have any sort of commentary or anything they'd like to add before we open up to the floor and to the webcast for questions. So I was just going to open the floor up to you both guys.
Thank you very much for that presentation. Just wanted to get clear in my head where you were coming from, because I think what you're saying is there's still a lot of work to be done on a lot of things we've talked about today, and there's a lot of details to be ironed out. Some of Mark's questions, what does it actually mean? What will the sign-off be? How long will it be for? As a group here, what sort of input could we have into that process, and how is the Commissioner consulting in the development of that process?
I believe we've got a meeting next week with the audit people who contributed to the external compliance assurance program to start looking at some of the tests and rules. One of the issues with audit is about the materiality, and GST doesn't seem to score a Guernsey because the level of revenue that's paid tends to be not as lot. But if you actually focus on the turnover within an entity, it is quite significant. Yeah. And so we want to talk to them about issues of materiality and what sort of tests would be appropriate.
I mean, that's really interesting. We were just talking before about getting the attention of boards, and in particular using things like the actual GST throughput rather than that net concept, because I know a lot of you out there would have, oh, what's the net GST? Well, actually, it's pretty small. Yeah. But if you actually look at the, how much tax is being managed, I know Luana, lots is the answer. You have the exact number. But yes, I mean that's often a way to get through to them.
Luana's saying lots, yet they have a lot of GST-free supplies.
No input tax supplies.
Oh, yeah.
Yeah. So, don't know if you guys...
Look, no, I think this is. We've been talking about this. It seems like we've been talking about this for 20 or 30 years, to tell you the truth. Yeah. But it's look. I think it's a really positive step in the right direction. I guess one thing, and this has been on the agenda for a long time, is just even outside the systems issue about just health checks and getting those signed off by the tax office rather than the tax office going back in and doing their own audit. It's almost like it's sort of 3/4 of covering ground that's already been done often by any of our accounting firms and many others. That I guess that's one thing. The other thing I'll flag, which is sort of slightly off topic here, but is still critical, is that the system itself, and this is more a legal issue than anything else, doesn't really encourage taxpayers to tell the tax office what they're doing. If you look at the rulings program and all of the things that, you can put in a submission for a ruling request, and if the tax office disagrees, then you get into this fairly draconian penalty regime, whereas if you don't tell the tax office and you get advice elsewhere and then self-assess on that, you seem to walk into a softer penalty regime. And I think those things need to be clearly looked at. The whole rulings process, to me, just seems to become so formalised that there is a significant discouragement from anybody coming forward. Yeah. So I think there's two things. One, there's what you're doing here on the compliance, which is in your control. The other is, there's some legal constraints about almost stopping people from coming forward to the tax office.
Yeah, as I mentioned before, I'm currently looking after the advising areas of indirect tax, and that's one of the issues I've raised with my people, because as I said to you earlier on before, the self-assessment legislation came in 1992. That's a generation old. People don't realise that, yet we're still working under that same framework. Business has moved on a lot since then. And one of the problems we face is taxpayers wanting to come to us for certainty. They want assurance, even when they know what the answer is. And that's a pretty dumb process. It's also interesting to note that our current Minister, Matthias Cormann, made a statement about smaller government business during the budget. And they're actually still talking about the contestability framework. They want a smaller government. And so that's a real issue that the tax office has to face. If we don't offer an appropriate level of client service and delivery, what's to stop the government deciding to shift some of our work and let the firms do it? So we've got to take a different approach. We've got to be contestable. It's happened. We're
with getting a lot of argument up here.
It has happened with AGS and the advice they've been providing in the past. So, but we do have this old legal framework, and it'd be nice to think that that we would be able to talk to Treasury about a different design, and it may even be part of what we put forward in the future. Why do taxpayers have to come to us for that certainty? Can we have a better regime where, as long as they take a reasonable approach, it should be acceptable? The Commissioner actually, we had senior people got together with the Commissioner for a video hookup before Christmas, and he actually put it to us. He said, quite often there'll be a position on the law that's contestable. We will fall back into our existing mode and say, well, we don't think that that's the policy intention of the law. The law is unclear. But it's very difficult these days to get legislative change. If Treasury aren't prepared to support a law clarification, the Commissioner said that as long as the taxpayer has applied due diligence and got appropriate advice from a skilled person and has a position that's arguable within the law, we should get over it, just accept it and move on. There will be situations where that particular position we think we don't support, even though the law might be unclear, and in those situations, if it's in the public interest, we might want to litigate that. So it's not just in the audit area, it's also in the advising area that there are going to be changes.
Stefan, if I could just raise a point and ask a question. I think the indication you're giving are things that we've long wanted to see, that we're moving to a more, shall we say, fair and reasonable framework rather than a precise thing. And you've talked a lot about what the ATO would like to see to be able to go there. Can you give us an insight perhaps as to why? Why the change? What's driving it? Is it that it's not working, doing it the way you're doing it? Is it that it's because resources are being diminished and you've got to do it more efficiently? What's the motivations lying behind it?
We're open for business. It actually started before the government sort of started putting out that mantra, and it's the Commissioner. As tax officers, a lot of us were quite shocked when Michael Vicenza wasn't reappointed. But it was a conscious decision of the former government. And not only that, but then they also brought in Andrew Mills as our second Commissioner looking after law. It was really only Neil Olsen, he's the only old tax officer that's around. They've just announced a new Chief Tax Counsel and Deputy Chief Tax Counsel. Again, both practitioners. They want a cultural change. They want a cultural change. Otherwise, if we don't change the way we view business and the application of laws to business, our work may not be around for us to do.
Thank you for the opportunity. Take it up, Glenn.
No, I think that's really what's driving it. I have noticed that I've always held a personal view that in interpreting the law, a lot of people have taken a revenue protectionist stance, and I don't think that's been appropriate. That's my personal view. But then I'm always a little bit different.
I hear what you're saying, and I applaud all of that. I just think about the tax office over the years I've dealt with it, and you're talking about a quite profound cultural shift. The ACA concept took an enormous amount of time to get going, notwithstanding some fairly obvious benefits. This seems to go one step further. Is it manageable in a cultural sense, or will the devil be in the detail?
No, I think it is. But the hardest thing is changing people, and as I've been travelling around giving these sessions, I've been talking to my senior people about it, and they would like to change. Last year they undertook a survey, a cultural survey of the staff, and the staff themselves are saying we're overly bureaucratic, we're risk averse. They really do yearn for change. We're really bogged down in our systems. I think the Commissioner actually referred to it in his speech. I can't find it now, but he has actually said that the problem is that we get bogged down in our own processes and lose sight of what the outcome should be. And tax officers do feel frustrated by that. As I said before, we're losing 3,000 people. That's a great catalyst for change. Most of those people will go through, or hopefully all of them go through voluntary redundancies from different areas, and the whole office will be out of balance, so they'll be shifting people around. We'll have to do our work differently. There is an expectation that we will do it differently, and the Commissioner's saying, I don't want you talking about it, I actually want you doing it. And I've never heard that language before. So it's really positive.
And to me, it's sort of shifting the dynamic. Whenever we've talked along those lines in the past, the WIFM the what's in it for me part of upgrading systems has been a much tougher question to answer. And tax functions go to IT functions and say, hey, we're operating SAP. At the moment, all I get is a RFUM SVOO report. It's got no exception reporting whatsoever. I'd like all these things. IT function says, well, yes, okay. I can look at that. I'll put you 150 on the list, and next year you'll be 160 on the list. And I've sort of done a back of the envelope calc, and it might cost me 700 grand. You go to the CFO and see if you can get that budget now. And as a result, guess what happens? Not a whole lot, but if what you're saying happens, then that's a very different discussion. Because the CFO looks at it and says, okay, so if I do these things and fund this, be it with an external one or just using more of the functionality of the existing ERP system, I can close off an audit year, unilaterally close off an audit year. That changes the game profoundly, but questions become timing and fine print and disclaimers and all the rest.
Yeah. So. And we're currently engaged some external audit specialists, e-audit specialists to assist us in looking at some large corporates. And it's a huge cost to those companies to have us involved and to be looking at them. And if those companies had invested appropriately in products to give us the assurance, well then we wouldn't have to be engaged. So.
Might let you take a seat if you like.
Okay, thank you.
You've been in the hot seat for quite a while now. Now, do we have any questions on the floor here? I do have one on the webcast, but anyone got any questions out there? Yep, we've got one in front, shall we?
And I heard, my name's Mary, and I heard that recently the taxation office approached some public companies asking for a detailed list of general ledger accounts, and to start with probably this kind of process. So my question is that, and if you can get general ledger accounts and those details, then what kind of information would you be looking at? And what kind of work would you, or analysis would you do upon getting those information? My understanding is that generally businesses are very reluctant to disclose so much details to taxation office. Thank you very much.
As I mentioned before, I think you mentioned it, my area of specialty was the machinery provisions in the law. We've got extremely broad powers to request information, but we haven't exercised them. And where we want to get to in the future, and they're actually talking about it, looking at standard chart of accounts, and to actually get different types of information, and things like trial balances, have that automatically come into the office. With a few other details, taxpayers wouldn't need to lodge a business activity statement, wouldn't need to lodge an income tax return. It'd just be automated. And what the Commission is saying is that if we get taxpayers who are prepared to give us that information, that's willing participation in the tax system, and we wouldn't need to. They would be a no or a light touch taxpayer. Now, your specific question about the general ledger of a public company, I'm not aware of what we want that information for. I've got some colleagues down here from our public groups area in indirect tax. Yeah. No.
It might be part of the pilot for the standard chart of accounts. They're doing some initial work there.
Yeah.
That's the only thing I can think of.
Yeah.
Okay, great, thank you. I have a question on the webcast here. I'm very impressed I'm able to use this technology. This is from Richard. It says, does the ATO publish ERP system standards, presuming like sort of or would they in a more broader context, most similar to say the air, how the air specifications are? Yeah. And how would a taxpayer ascertain whether ERP satisfies the standard in the absence of a certification from the ATO?
We haven't published those standards to my knowledge, but we would be looking at that as part of this.
So something similar to like the air specification.
There is There is one that's been done by the Malaysian tax authorities. This enormously lengthy data query, effectively. But it's not mandatory, it's just expressed as something they would like to see all corporates be able to produce data to. So there is a precedent floating around.
I think the conversation that we were having is around if we were talking about software providers and giving that information to software providers. It would obviously be ideal if that was published for everyone's benefit, because some people might like to include it in their own
systems.
Own systems.
No, that's
do
a
it
good
in-house
point.
or something.
Exactly.
We don't want to. We want it to be an open market. You either have engaged someone to bring in their own assurance tools, or you modify your own tools.
Thanks. Do we have any more questions out there? Another one over here, gentlemen.
Peter, I'm asking this question to you, Stefan. Listening to the Commissioner's speech at the Corporate Tax Association conference and combining that with what you've said today creates some interesting observations for me. The focus seems to be on being fair and reasonable, and for big corporates, with the regime of having boards and shareholders and audit committees and auditors and all that sort of thing, it would seem that the ATO should be getting greater reliance on those big companies, and that could, and I'm really stretching things here, but I'm interested in your observations, that could mean that big companies are no longer audited and the big focus is going to be on the smaller companies.
That's what assurance is about. As long as we get that assurance, there would be no need to be undertaking the audits. But we still would be looking at intelligence around the issues of the application of law to facts, and some of those risks, things like apportionment, would always be there. Some of the property issues. The real area of behavioural non-compliance is at the small end of the market, but that's very resource intensive. The return on investment there is far less than the return on investment in the larger end of the market.
So you might not be doing any audits then?
Listen, I'd like to see a situation where we did have a self-assurance system, but where we think that there is an issue, when we go out there we do a really good job.
Well said.
Sorry, Peter, I think the issue is probably slightly more complicated than that anyway, isn't it? Because what we're talking about is that if you had a completely automated system, right, a QBE, then and the tax office understood the controls and process and everything, then they could sign off and they'd say, well, that's beautiful, right? But that's generally not the case. And so the issue becomes not just relying on the numbers that are going through the system and coming out the other end. To me, it's more about, okay, that's great, we're getting the information out of our source systems, etc. But it's then checking those numbers against other data to make sure that the numbers that have gone through have actually been put in, and then so what's coming out is the correct number, right? So I don't think it's ever going to be a matter of just the big companies just, oh look, we're using Oracle or SAP or whatever, and the number that's coming through that is just fine unless everything was completely automated, which, as I said, is not the case. So there is a lot of stuff that they have to do, and if they're willing to make the investment and the effort to do that, then I think that they should receive the benefits of that from the tax office, because in a sense, on a monthly basis, they're doing the tax office's work.
Okay, great. Any other questions? I actually had one. Is there any ever desire to, say, have POS terminals giving information directly through to the tax office, the transactional information?
Yeah, there is some work around point of sale going on now. We only became aware of it in our area last week. It's a big organisation, the tax office, and people are thinking about POS information.
So alternate data.
Yeah.
To be able to do some.
And particularly in relation at the lower end of the market as well. Particularly when you're looking at GST, the cash economy at the lower end of the market is out there, and it is a problem. It is thriving. We do have a program. But it'd be nice to be able to use systems, and systems become very sophisticated into the future, and it will change the way we do our work.
Just thinking about the risk and governance review process that's been going on for a number of years now, and I know that as you've gone on, you've learnt quite a few things. What would you say are maybe sort of 2 or 3 of the key things that you've learnt through that process that maybe either you've done differently or is giving you some insight into what's actually happening out there? Throw to your friends.
But we've got Trevor Dodds and Phil Parker here, and they're probably better placed to answer that. But one of the issues that always keeps coming up in relation to systems is it's where there's manual interventions, always where the weaknesses seem to be. Someone's away, someone steps in, transpositional errors. And in a tax environment, of whether you're looking at a transactional tax, it's the multiplier effect of that mistake causes the big issue.
I suppose the other main thing that's sort of come just recently is, look, people's business change all the time, and you've got to change some coding in the system. And when you change coding in one place, it doesn't mean that everything's going to flow as it used to. It actually causes sometimes some other things to report differently as well. And then sometimes there's some unintended consequences to the way that things are reported. Sometimes that appears to be GST as well. So people are making changes, and those changes have been dictated to, might have been gone through the tax team, but there's no review or check of the outcomes to make sure that it's all flowing through appropriately. So I suppose the thing that I've noticed is that, we get the front process right in terms of tax advice. We get the implementation right, or we think we get the implementation right, but there's no follow-up and checking, and that would be the end of the story to say everything is now good. So that's just one of the observations of recent.
You've just described part of my job actually there, is checking those systems. So.
Also, just on IBS, because we did something like 71 workshops across many risks, including fuel tax credits and the like. But just recently, in IBS, we did something like 37 workshops last year. We will still do something like 17 between governance and risk. So it's still there in the current plan. That might change depending on the attitude of how the tax office is structured. But in large market, just a recent report, the BAS preparation errors are still 39% of the errors that we've had. System-related issues are 19%, and unsure of supply status is 14%. So it's still pretty basic. I think, as Stefan said earlier, we still have financial suppliers, we still have property. A lot of these risks haven't changed, and the percentages haven't changed in terms of IBS. And they manifest themselves also in the small market and the micro market as well. It's the same thing. The changes. I think one thing, following on from Trevor and also from Mark, we have found that the tax teams are not always have the weight in the importance of the change that's necessary, and yes, they do wait, and some things such as the changes of formulas and apportionment, it's if we have a contribution to I guess to strengthen that role, it will just dovetail into what we're trying to achieve here in our larger market program. So that's.
I'd just like to add, I mentioned before about those 3,000 largest that weren't lodging monthly, they were lodging quarterly. We'd actually changed our system, and we had some tests in place to pick that up, but when we changed our system, the flow on meant that test dropped out. And so, we're in the same situation as you are. We have large systems, complex systems. Not everyone can get it right, and that's part of this recognition about, well, what's an appropriate investment? What's fair and reasonable in getting the right amount of revenue?
Any other questions out there on the floor?
I have one that's slightly on a different subject. The question of input tax credit accelerators, which has been banging around in our circles for some time. James O'Halloran met with each of the big four in the last month or so to reconfirm that the tax office's view was that these things, if appropriately managed, are acceptable. and mentioned something about some sort of written confirmation. I'm just wondering where that might be at.
I was actually on my system just starting to make corrections before I came here. I got asked a similar question at yesterday's presentation, and I said that I was going to start working on the flight up from Melbourne. I was distracted by a pilot who was being made redundant, who was sitting next to me. But so I started it first thing this morning. Most of my morning and yesterday evening were dealing with my own redundancies. Not mine, but my staff. Don't worry, I'll be all right. I've always looked to the future. The future's always brighter. But when I get back to the office, that's my main priority. So hopefully we'll be putting something out in writing. We'll get back to the accounting firms as soon as James gets to look at it, which will be next week, I hope. He can't look at it this week. It's the first week I've ever known him not to be at work. He's not well. So, and so when he returns, he'll look at it, and we'll get back to you. And we actually want to release it early in July. I believe there could be another forum on that, or a meeting of, could be the large market or the forum that we were going to release it at.
Can I just make an inquiry or get a reiteration of one aspect of this that Mark has touched on, and that is that the businesses have to spend hard dollars to do this, right? They've got to go out and invest. And many of the incentives that seem to be available, the what's in it for me, are fairly soft. And it's very difficult for internal tax people, as Trevor's referred to sell the idea up the line. Is there a process in place, or is thought being put into how you can make this easier for the corporate tax group to sell the idea internally? Because obviously it's of benefit to the ATO, it's a benefit to the corporate, but it's a hard sell. You know, I've got to put out hard dollars now, what do I get out of it? So what are you doing about that dimension of it? I mean, it looks like you're trying to make tax popular. Client experience, you know, think about your audience here.
Listen, you're just a burden on your businesses. You're the tax management areas. You know, you're a cost centre. You don't generate income, but you know, there's not a lot we can offer. Yeah, one thing that I've been thinking about is the possibility of whether we can say that, you know, when you make those voluntary disclosures, when you come across those problems, and they could be significant amounts, you know, do we just say report it in the next BAS rather than go back? That's one incentive.
How about a discount for voluntary disclosure?
A discount.
A discount for.
Oh, Jesus. I had someone ask me about a staff discount the other day. The Commissioner's got to apply the law. He does. He has a certain amount of discretion. But how do I know the voluntary disclosure is not discounted in the first place, other than... That's what a hard-nosed auditor would say.
He's on to you. He's absolutely on to you.
If you don't ask, you die wondering.
Yeah.
Absolutely.
I was just wondering about the move. We obviously talked about the quadrants, and I think it is interesting, your observation, whether that is, you know, going to continue to be appropriate. And I know we've talked about people who are in which corner of quadrant 2, because there's sort of, you know, this corner of quadrant 2, and I think it's like any performance appraisal, you always want to make there to be more, you know, bands. I think the Commissioner took a view initially that most people went into quadrant 2. It was almost, until we know more, we'll put you in a safer zone and then we'll make a decision. In reality, has there been much movement between the quadrants?
There's been a lot of movement out of 1. Quadrant 2 remains fairly static because it is it's the large group of taxpayers. It's that quadrant 4, the low risk. You know, they're in there for a reason. We've looked at them, that they are low. And you've got to ask, well, if they are low, why do you keep doing the work the way you're doing it? Why invest in that? Could your resources be used better elsewhere?
Probably got time for maybe one more question from the floor if anyone's got a burning question now or never. Die wondering? No, we might just wrap it up there then. Look, I think that was a really interesting presentation. I really appreciate the fact that the ATO is looking at sort of a shift in focus from the right amount of revenue versus protecting revenue. Us certainly in business appreciate that shift in focus. And look, I'd really like to thank our presenter here today, Stefan, and Deborah, Dennis, Roger and Mark for their contributions as well, and also for CCH to putting this on for all of us. So thank you very much.
Thanks very much, Luana, and for Luana as well for chairing this session. Thanks very much for that as well. So as you might imagine, sitting in that front seat and being knee-deep in GST systems, I was itching to say a few words, but I'll save those to the end. It's actually been quite fascinating watching this discussion evolve around the country in the various cities. And I'd like to share, I guess, some of the observations and experiences we have when we've been dealing with clients and some of the interactions that we've had. Roughly about a year ago, we asked many of you in this room and your peers around the country to respond to a survey specifically in relation to GST. And that survey shed some quite interesting light on it's relevant to the discussion today. There's a whole series of questions, but there was one particular question that said, please tell us about the primary tool that you use for calculating your GST and for doing your analytics. And over 80% of the respondents came back and they said, we use Excel. Everybody uses Excel. And we then went on and we asked the next question. We said, how confident are you that your systems will actually comply with the ATO requirements? How confident are you it's going to give you the right answer? Interestingly enough, again, over 80% came back and said, we're really confident. And then we talked to the tax office, and the tax office will come back and they'll say, actually, system integrity issues are one of the biggest causes of error. 2012 to 13, $320 million of underpayment. And we have statements along the lines that says actually mistakes are inevitable. So when you look at that, the two don't actually sit well together. So you ask yourself, yeah, why is it so that there appears to be a definitive confidence gap between what the practitioners are doing on the ground versus what the tax office is seeing when they're going and actually talking to the various corporates. Now what we're seeing, and it probably sheds a little bit of light behind this, is when we go out to clients and we start talking about GST and GST systems, we go through that same process in asking those questions, and invariably, yes, we do use Excel. And when we ask about the analytics, everybody says, yeah, we do analytics. Of course we do analytics. When we dig in a little bit to the analytics, for those that actually do it, we find they usually do one or two tests. If you know a little bit more about when you dig into the analytics that you need to do in order to get a reasonable level of comfort, there's a lot more than one or two tests. There's well over 10, 15, 20 odd tests that you need to run through. And then if you dig a little bit deeper, you get some really interesting examples. And the one that actually sticks out for me was a client that I spoke to less than 2 months ago, where we had this conversation and there was this incredible comfort around the spreadsheets and this incredible comfort around the analytics that they do. So I said, well, what sort of analytics do you do? And they said, well, we take our 10 largest transactions and we really delve into a lot of detail. So we talked about that for a little while, and then we sort of came back to the end and we said, how many transactions do you actually process every month? It was 90,000. Now, it's a very extreme example, but it's illustrative. So it's very relevant to, I guess, to the discussion, and I guess it sheds some light, I guess, to the initiative that the tax office is putting around that self-assurance model. So I think it's a very good move. Thank you very much to our panel, our chair, for today. I think it was a very informative session. I hope all of you got a lot of value out of today's session. Thank you for taking the time out this afternoon, and thank you for the preparation that you've taken and the time out. Before we wrap up, if I could just ask you all to complete the questionnaire and the feedback form. These sessions are actually run for you, by you and your peers. So we do actually go through those in detail, and we do adjust these sessions as we go through. So if you could leave those on the way out. The other thing I'd just like to highlight in your packs, there's a tax risk management framework session coming through at the end of this month. There's a webinar as well as the ability to come to the actual session itself. Tax risk management framework is quite an interesting area, and again closely tied to what we're talking about today. We talk to a lot of clients. Everybody's aware of it. Everybody thinks what they know. They think they know what it is, but actually everybody's got a different view of what it actually is. So what that workshop's about is actually starting to dig into the components and the elements that that feed into an effective tax risk management framework. So I hope to see many of you there. Other than that, thanks very much for the afternoon. I hope the rest of the day is great, and see you next time. Thank you. Thank you.